Heard of people making $100, $200, or $100 every single day using Binance futures trading. Now, let me tell you something. People are there who are turning $10 into $100. People are turning $100 into $1,000 every single day, and in a period of time. Sometimes in 1 week, sometimes in 1 month, using Binance futures. Now, the great thing is that with Binance futures, you can make profits whether the market is going up or the market is in downtrend, so long as you can do your analysis well. So, ladies and gentlemen, if you are the one who wanted to know how to do Binance futures trading, then in this video I'm going to show you step by step of how to do Binance futures trading. But before I show you how to do Binance futures trading, you should know that yes, you can turn $100 into $1,000 on Binance futures trading. But you should always remember this, that let me show you this screenshot that I want you to really remember before you go for Binance futures. Now you can see this screenshot is coming from Market Insiders. Now if you're a trader or you have been so much into trading, or if you are new, you should know that Market Insiders is one of the blog that gives legit information or researches about trading. Now they did a research and they are showing that one study in Brazil, it showed Brazilian futures traders, this very trading that I'm going to be showing you, that it showed Brazilian futures traders, they found that 97% of day traders and 97% of the day traders lost money in 300 days. 97%. It means only 3% that made money. Then here, another study that took place in Taiwan, I think that is Thailand. I don't know the place exactly, but another study that took place showed that in 2006, from 1995 to 2006, showed that only 5% of traders made money. So what does that mean? It means that you need to be so disciplined, you need to be very careful to make money with futures trading. Therefore, I would advise that before you go for futures trading, at least make sure you are comfortable with spot trading, so that you can know futures trading. But anyway, if you just want to know how futures trading works, then let's continue with this video. Now you can see over here how to access futures trading. You are going to click down here on futures. When you're on Binance, this is the homepage of Binance. You click down there on your futures. If you don't have Binance, the first link in the description of this very video is going to give you bonuses if you open up an account with Binance. Trading bonuses. So click the first link in the description of this very video, you open up your account and you are going to be getting bonuses. Now after opening up an account and you come to your home page like this, you have to deposit money on your account. If you don't know how to deposit money on Binance, of course you are going to check the link in the description. There is a video that I made about depositing money on Binance. It's going to help you. Now you come and click down here on futures. Now when I click on futures, it is going to open the interface of futures. Now this is the interface of futures. Now there are some, I'm going to explain quickly about what these things mean. There is this M. Let me start from up here. Now there's USDSM. This is USDS margin. Then there is this coin margin. Now I'm going to explain that quickly. What USDM means, that the base currency, or what you are trading with, the base currency you are seeing here USD, but the base currency what you're trading with is going to be either a stable coin, any of the two most common stable coins. The most common stable coin that we use is this USDT that you see, and BUSD. Those are stable coins. So when you're going to trade, and the base coin or the profit or loss is going to be counted in form of USDT or BUSDT, that is called the USDS margin. But now the coin here, the coin margin, it means that there are a lot of different coins that you can use as the base currency or the base coin that you're going to be using. So when you click on M coin, you can see, in case of this, you see BTC USD. Now the base here is Bitcoin. So it means the profits or loss you're going to be all shown in form of Bitcoin or BTC. So I hope you have understood that. Then when you come to this very part that I've been showing you, that is the trading pair that you want to trade. Now when you have come to trade, you need to choose your trading pair. Now when you click on that, you are going to see different trading pairs. So you can use this search button to search for your trading pair. Assuming I wanted to trade the Binance coin, the BNB, I click on BNB and it is going to open like that. Or else, if I wanted to trade Dogecoin, I click on Doge and it is going to open like that. So but there are some few things I want to explain to you I'm not going to trade on future on coin margin. I'm not going to trade on coin margin. I like trading on USD, so I'm going to click on that USD. So after clicking on that, we were still explaining this, and I'm going to click on that. So I'm going I said when you are looking for Doge, you look for Doge, you search Doge. Now you can see Doge over there. You can see Doge perpetual, you can see USDT perpetual. So I want to explain that word of perpetual, but let me explain by first searching for BTC so that you see understand what I'm explaining. Now when you search for a coin, you are going to see that here it is showing BTC USDT perpetual. I think you can see down there that is showing perpetual, and yet here you're saying BTC USDT quarterly. Now the two differences is that these contracts here, they expire. This contract expire, the quarterly contracts expire, and you can see this here shows the date in which this one will expire. So I don't like really trading those things that really expire. I want something that is free. There is this perpetual here, so I just go for that perpetual. And then I click on perpetual, BTC USD perpetual. So in this case, I want to trade, and that is the Bitcoin. It is already open there. I've explained the meaning of perpetual. Now when you want to see the graphs, you're going to be clicking here to see your graph, to do your fundamental analysis. You click there and the graph will be able to open for you. So the graph is going to be able to open, and you can see over the graph. Here is the graph. You can see, read, do your fundamental analysis. Now if you want to do really know how to do fundamental technical analysis, and you want to start trading, I have a full video that I was talking about the fundamentals of technical analysis, or what you can use in technical analysis as a beginner. You can watch the video in the description. I'm going to be able to put it in the description. Now that is how you read the graph. Now here there's calculation very fast. So this is one of my favorite tools when it comes to futures trading. I love using the calculator. So this calculator, what does it show? This calculator here, for example, here you are seeing you can calculate the profit or profit and loss. You can calculate the trigger price, liquidity price, max open. But let me just explain only profit and loss, how to calculate profit and loss. Others you'll try them at your own free time. Now ladies and gentlemen, you can see here there is long, there is short. Now after doing your fundamental analysis, your fundamental and technical analysis, if you find that yes, the price is likely to go up, you are predicting that price is going to go up, then you go with long. If you're predicting that the price is going to go down, then you go with short. So if you predict the movement of the price correctly in both sides, you are making profits. Now here we are going to be looking at entry price. So here to calculate, here you put in the entry price, exit price, and then the quantity of BTC that you are going to buy, and everything will be sorted, or everything will be calculated for you. Now let's first come back and see. Let me come back and first see the price. Now here here the buys. People are making the buys. Here the sales. Here up here is sell, then down here is buy. But what you are seeing over here, is the price of Bitcoin at that particular time. The price of Bitcoin at this particular time is being shown here. So for you can do your calculation, your analysis. After doing analysis, if you feel that the price of Bitcoin is really going up, so you can see here it is being sold at 21,836. So 21,836. When you come to your calculator and you say, when I enter 21,836, then I come out here. Let me come to the calculator. I say, okay, entry price, I'm going to print 21,836. 21,836. Then I want to exit at 21,800 and maybe 50. I want to exit at that price, and then you are going to put the quantity that the quantity you are going to put. You put the quantity in form of USDT so that you can easily calculate quantity. Maybe I'm going to use 1,000. I want to use $1,000. And then if you use $1,000, remember, if you are going to use $1,000, remember you have a leverage. Now here, this one is leverage. You can also put which leverage are you going to use. For example, I like using 20x, but I'm going to explain leverage a little bit later on. So when I click those three things. I click on calculate. When I click on calculate, it's going to give me these results. Now this result up here, it shows how much I need to perform that trade. So for me to do this trade, I only need 14. I only need my own money that I need to put in the account and trade with as collateral. I only need 49.13 USDT. Because I'm using leverage, I'll be using leverage. If you calculate that times this, it should be able to give me a quantity of 100 USD that I want. Then profit and loss, I only get 0.63 USDT as profit, because I think the price here is so near, and I'm buying something small. I'm buying small, and then you can see here that the return on investment will only be 1.28%. So you can try this calculation with this calculation. You can try it for free, and you don't lose anything by trying out the calculation. So you can try out the calculation before you do any trade. So when you come back here, I've shown you that these are sell orders, these are buy orders, this is the current price. Now let's come here to the real job. Now this order here you are seeing here, cross. Now we have two things, we have cross and isolated. Now when I click on the go down arrow, you're going to see over here we have cross and then we have isolated. What does it mean? Now if you have isolated, it means that when you are going to be liquidated, your money that you had put as collateral, or that you had specified for that particular trade, if they are to be liquidated, you are going to just lose that money that you had placed for that particular trade. But if you had put another money, or if you had more money on your futures account and you have this cross activated, you are using cross, it means they can cross from the amount that you had placed or you had reserved for that particular trade. If you are going to be liquidated, more money can be got from your account, from your futures account, so that it can hold on the position until you deplete, or until all the money gets done. So then that's when you can be liquidated and you lose all your money. So that's why for risk management, I really love using the isolated for risk management, but some people use cross because it also has its own advantage. Now this is leverage. I told you, you just click the go down arrow to choose which leverage you really want. You just click the go down arrow and you'll be able to choose different leverages that you'll be using. Now here is buy. Now if you predict that the price is going to go down and you want to put a short or sell, you just click on sell this side and you'll be able to change everything to red, and you feel like things are going to go red. But when you click on buy, things will come back to green. Now this is the limit. There are a lot of orders that you can be doing. This is the limit. You can click on limit. Now when you click on limit, you have this limit, then you have the market price, cost only, you have a stop limit. But because of time, I'm just going to talk about limit, and I'm going to talk about the market price. You can buy at exactly the market price and you continue, or you can buy at the limit. So I'm going to make a trade right now. So how am I going to make a trade? Before you make a trade, you have to put money. Remember, I have some small money here. I have like 21 USDT. You can see it over here on my futures. But if you don't have money on futures, you can be having money on other wallet. Let's say spot wallet. So for example, when I click on my wallet, you can see that I have money in other wallets. Like I have 96% of my account is not in spot. But if you are in spot, if maybe your money is in spot and you want to transfer it like here in spot, you just click on transfer to transfer it to futures. When you click on transfer, your money, you are seeing here, from spot wallet, not to funding. But remember, we are trading what? We are trading USDS margins. So let's open it and see. You are going to be transferring your money to this very section here. So you click that section. When you click that section, then you click on USDT, and then here you put the amount that you want to transfer. Then after everything is correct, you just click on transfer here, then your money will be on your wallet. So on futures wallet, that's how your money will come here, and you'll be able to see your balance on your futures wallet. So after transferring money on your futures wallet, you are going to do a trade. Now it's time to do a trade. Now how are you going to do a trade? You are going to first analyze your market. Now I told you that if you want you can begin potential fundamental analysis and technical analysis. I have a video that can explain that. You can just go and watch that video and you'll be able to follow along. But for now, let me say I want to use the market. I want to buy at the market price. So I'll click on market price, and then I say, okay, how much do I want to buy? I want to buy, let me say I want to sell off. I want to sell. It is the same thing. Selling to means you are predicting the price is coming down. Let me say I want to sell off. I want to buy. It is only the same thing. It depends on what you have analyzed the market for. So for me, if I analyze that I'm selling, then I will click on sell. Then I'm going to click. I'm selling at the market price. Then I'm going to write the amount. So example, I want to write 100. Now someone is saying I'm writing 100, but I only have 29 USD here. Now that is called the power of leverage. Now with the leverage, remember I've taken a leverage of 20x. Now that's why you are seeing that the only cost I need, or what I'm risking for this particular trade, is only 4 USDT. I'm only risking 4 USDT. So I can just click on short. I've not analyzed this market. I can just click on short, and when I click on short, it means for me to make profit, prices have to go down. If they go up, I'll be in loss. So and remember, I've only risked what? But with this cross, you remember, this is you should be avoiding cross. If you go for cross, it means your money, more money that has been here, can be deducted in order to support that trade. Like you are seeing that here I had 29. Now the 4 has been taken away to support that particular trade. So the 4 is supporting the trade. Now how do you see the trade? If you had used the limit, it was going to be under open orders here, but this is the position. You are going to click on position. When you click on position, now you can see over here that this is the position that we are in. So we are holding this position, and so far this is the profit and loss. The only profit we have made so far is 0.08 dollars. Then the size of USDT that we have used is there, and then we have the entry price. We are trading Bitcoin. That is the price we entered in. So the margin, or our own money that we have used for this trade, is only 4 USDT. This is how crazy it can be. So that is the market price. Then this is the percentage profit that we are in. It will be reading there. Then now you can be liquidated. By the way, for this trade to be liquidated, if Bitcoin reaches this particular price, I can be liquidated, and all that money I lose, all the $4. So that is how you trade. So trading this really depends on the more money, to make more money really depends on your strategy. It depends on the time you give it, and also your capital is so important, because your capital is going to make you not to go for higher leverages that are going to put you on high risk. So ladies and gentlemen, if you enjoy such content, make sure you subscribe to this channel and turn on the notification button, because I'm going to be posting more of such information to you. Otherwise, thank you so much for watching. See you in the next video.